We are here at the U.S. Africa Business Summit, and we are speaking to the Secretary of Commerce, Penny Pritzker. Thank you for speaking to the Wall Street Journal.
Thank you.
Excellent. Could you give us briefly 2 to 3 points where you feel that the Obama administration really has advanced trade with the continent?
Well, first of all, the U.S. Africa Business Forum is a huge part of our initiative to deepen economic ties with the continent. And what you're seeing today, for example, is another announcement of over $9 billion worth of deals, building upon the first U.S. Africa Business Forum. I think a second way that we've been advancing trade is, for example, yesterday I met with the heads of 5 East African countries to focus on making progress in travel and tourism, infrastructure investment, and agribusiness. So there's a lot that we've got going on. And you've seen non-petroleum exports from Africa to the United States grow, as well as non-petroleum exports from the United States to Africa grow.
I've seen some numbers where overall there's been a small contraction, though, in overall trade with the region due to the U.S. producing some of its own oil. One of the key trade deals with Africa, the President was able to get that reauthorized with the help of Congress, but there was no money really allotted to help African countries export foodstuffs, especially with the U.S. How can we really expect additional growth in, as you say, the non-petroleum goods area without those funds?
Well, that's first of all, the fact that there's been a small decline is why now so many of the African governments are focused on economic diversification, which is something that we're working on here at the U.S. Africa Business Forum. We'll have a lot of conversation about that. We work with the governments. But the other thing is the Department of Commerce, for example, we've been opening more offices in Africa. We've doubled our presence in order to help more African companies be able to do business in the United States and also help more American companies do business in Africa. So we're trying to fill that gap.
Okay. Now, inevitably, any engagement with the continent is going to be compared to other trading partners that the continent has. So, for example, China has committed, it's estimated about $100 billion or more between 2009 and 2014. How can the U.S. compete with those numbers and differentiate themselves from other trading partners?
Here's what I know. First of all, I've traveled to Africa. I've worked with these leaders, and we've got, I think, 46 leaders here at our Africa Business Summit. And what I know is they want more American businesses, and they want more American foreign direct investment, and they want more American products. So what I see is they're asking for help us to make our economies more desirable for American investors. What I see on the business side is, and we've got 200 CEOs here, half of whom are representing American businesses, they want to do more business in Africa. So our job is to take advantage of that opportunity, supply and demand.
Makes sense. So it looks like to me that the administration's push is to get the private sector, the U.S. private sector, involved. But my question is, given that certain countries on the continent have a democracy deficit, there's a weak enforcement of contractual law, there's little transparency, how can we expect the private sector to really be confident going into some of these countries?
Well, that's where the government comes in, and that's where we're working with the governments to, for example, take Tunisia and what's happened in Tunisia, not only embracing democracy since 2011, but frankly doing the hard work to reform their banking system and their banking laws, recapitalize their banks, and then just passing their investment law. Nigeria, the largest economy in sub-Saharan Africa, struggling right now because of commodity price falling, but a president committed to tackling corruption, absolutely essential in order to create certainty, and also a budget that is focused on investing in infrastructure, which is absolutely critical in order for that country to be able to continue to grow and diversify its economy. Take Cote d'Ivoire, the fastest growing economy in Africa, another country that we're very focused on. So, there will be competition between these countries to attract capital. I think that's positive because what it's forcing folks to do is raise their game. These countries have got to become more competitive to attract capital, the capital they want with the kind of conditions that they want. You see East Africa, these are countries that are coming together to say, how do we work more closely together to attract more foreign direct investment. All that's good.
Excellent. How do we move forward from here to a free trade deal with more African countries?
Well, I think the first step is doing exactly what we're doing. First of all, building a network, building relationships, building demand. And that's what's going on at the U.S. Africa Business Forum. Because, trade deals come from a need, filling a need. And I think that, right now, AGOA is a huge opportunity for African countries. And part of what we want to do is help them take advantage of it. But at the end of the day, these countries and their businesses have got to figure out how to take advantage of AGOA in order to benefit from it. We'll help, but they've got to work with their governments to say, hey, we have an opportunity, big market available to us with low tariffs. How do we do that?
Now, the President's signature initiative, I think one could say that, is Power Africa, which is all about building out power infrastructure on the continent. How much power has come online since he announced it?
I think the original announcement was 10,000 megawatts. We met that, and he's now tripled the goal, our president, to 30,000 megawatts. So big aspirations. It's a fundamental, Power Africa is a fundamental recognition that without electricity, it's hard to have a booming economy. It's a fundamental need. Infrastructure is another fundamental need. And it doesn't matter if you want to do manufacturing or do travel and tourism, you need both. And so, this is a very, very important fundamental work that is going on.
And of those, that power that you mentioned, are we sure that that's all can be directly attributed to Power Africa, or were those some projects that were in effect before the announcement?
I'm not the auditor or the accountant as it comes to this. All I know is what's happening is good, which is Africa's getting more power, which is absolutely essential to grow the economies on the continent.
Excellent. Then, to wrap up a little bit, this is President Obama's last term, right? And so there will be a little bit of an assessment of his legacy on the continent. You've just mentioned some of the strengths of what you think that this administration has been able to achieve. Do you think these achievements will last? We spoke a little bit about the fact that AGOA had no money attached to some of its provisions, as well as Power Africa. It has no new money allotted to it. So will these provisions, will these initiatives last after the transition?
I think absolutely, and here's the reason. First of all, the power's not going away. It's now the infrastructure that's being put in place. Second is AGOA is in place for 10 years. So this is an opportunity that hopefully the countries will take growing advantage of. And then if you look at the U.S. Africa Business Forum, that's about deepening and sustaining relationships and partnerships. And regardless of administration, those relationships and partnerships are not going to be torn asunder. So I think there's a lot that is sustainable that will continue forward.
Thank you.
Thank you.